the volume is low, unlike the sort of the sell-off volume that suggests there is not much supply coming out on the way up. There are a few key levels. For example, here is one, 54.30. That's the axis line where we see the breakdown happen. That's first level, and that's the zone. The next level will be this axis line. This is where we have this failure bar show up. That bullish bar right there is the bullish engulfing bar, bounce up from the demand line. And next bar comes with a failure bar, immediately reverse everything and then followed by a breakout of this up channel and going into selling climax. This relief rally is going on for about 8 sessions, but volume is on the low side. That suggests we do not have excessive supply coming out at the key levels. For example, this axis line, that's where we have the failure bar show up, but even at this point, there's no excessive supply coming out. If the bear were to attack, that is a good level, but do we have that? No, not really. Volume is on the low side. We do not have excessive supply within the zone, no excessive supply at this axis line. That's why it keeps going up, and until it need to reach the point where we see there's spike of the supply, it could go up and test the previous high. That's the S&P 500. And Nasdaq wasn't looking that bullish. We'll look into that shortly. In terms of the price action for the past few days since last Tuesday have a follow through to the upside. And Monday, there was a bit of the rejection. Both the demand and the supply did not commit. On Tuesday, there is a follow through to the upside, have a big breakout to the upside, commit above this axis zone, and then followed by the continuation to the upside for many days with relatively low volumes. That suggests there is no excessive supply coming out to attack the market. The swing direction is still up and the bull is still winning. However, there's increasing of the supply with increasing of the volatility. This swing still need to be tested. That's the uptrend. That is a change of character in terms of the magnitude to the downside. That's the largest down wave that we have in the past. That comes with increasing of the supply, increasing of the volatility, increasing of the speed to the downside. At best, the current rally makes it a range. There's a bigger range. Instead of having this type of the lower low test and then eventually finding its own structure, that should be the trading range that we could anticipate. That shows some strength in this market. Even if it forms a trading range, that's still a strength. One thing to be cautious is whenever it approach the key levels, for example, here is one, we need to watch out for emergence of the supply. Next resistance zone will be this 5,700. So that will be the obvious level. 5,700 will be the next resistance zone and is likely to get tested. If there is suddenly another spike of the supply, that could correspond to the Fed minutes of meeting or the Jackson Hole Symposium. Need to check out what's Powell going to say and watch out for increasing of the supply if there is. Otherwise, the direction will be still up. That's still going up with relatively low volume. No excessive supply. Still safe. On Thursday, we still have some economic data coming out, the PMI and also the minutes of meeting from the Fed. On Friday, 10 p.m., Powell is going to speak. On Saturday, there will be the symposium. So this should be the catalyst to move the market. There is nothing to worry about apart from this is not a market that's driven by aggressive demand, but rather this is a lack of the supply. That's why the swing is still up, and that's something to take note. The setups is still working well. One thing to be cautious is to manage a trade conservatively, because if it turns, it could be very quick, just like this. It only took 3 days to have this sort of the sell off. one day is with this big spread bearish bar. Watch out for any type of the reversal with increasing of the supply. But short term still going up, the swing also still going up. And next resistance will be the 5,700 level. But medium term, I still viewed it as a trading range. This should be the trading range that we could anticipate because this leg down with excessive supply and increasing of the volatility need to be tested.